The Federal Reserve controls the most powerful economy in human history. It sets interest rates that determine whether you can afford a mortgage. It controls the money supply in ways that cause inflation to eat your savings. It can create trillions of dollars with a vote in a boardroom. It is not a government agency. It has never been fully audited by Congress. Its board meetings are private. And most Americans cannot tell you who runs it or how it actually works. Here is what they taught you in school. The Federal Reserve is America's central bank, created by Congress to stabilize the economy. Here is what they did not teach you. The Federal Reserve was designed by private bankers, for private bankers, at a secret meeting on a private island in 1910. The men who designed it represented roughly 1/4 of the entire world's wealth. They designed a system that would give them permanent influence over the American money supply. Then they asked Congress to make it law. In November 1910, Senator Nelson Aldrich boarded a private train car in New Jersey with 7 men. They traveled to Jekyll Island, Georgia, a private resort owned by some of America's wealthiest families. They used first names only so servants would not learn their identities. Over 9 days, they wrote what would become the Federal Reserve Act. The men in that room represented the Rockefeller banking interests, the Morgan banking interests, and Kuhn Loeb and Company. They were writing the rules of American banking for themselves. The Federal Reserve Act was passed by Congress on December 23, 1913, 3 days before Christmas, when many members had already left for the holiday. President Wilson signed it that same day. He would later write that he feared he had unwittingly ruined his country by signing the legislation. Quote, "A great industrial nation is controlled by its system of credit. Our system of credit is privately concentrated. The growth of the nation and all our activities are in the hands of a few men." The Federal Reserve is structured as a hybrid, a government-created body with private ownership. The 12 Federal Reserve banks are technically owned by the private commercial banks in their districts. Those private banks receive a guaranteed 6% annual dividend on their Federal Reserve stock. The Fed's profits, after paying that dividend and operating expenses, do go to the Treasury. But the critical decisions, interest rates, money supply, emergency lending, those are made by a board that operates with a degree of independence unprecedented in American government. When the Federal Reserve creates new money, it does not physically print it. It credits numbers into accounts. Between 2020 and 2022, the Federal Reserve increased the total U.S. money supply by approximately 40%. More dollars chasing the same goods means each dollar buys less. That is inflation. The people who received that new money first, large banks, financial institutions, asset holders, got to spend it before prices rose. Ordinary Americans, who received it last through wages and savings, got to watch their purchasing power quietly disappear. In 2008, the financial system collapsed because major banks had made catastrophically risky bets with borrowed money. The Federal Reserve responded by creating trillions of dollars and lending them to the banks that had caused the crisis, at near zero interest rates. The banks used this money to stabilize their balance sheets, pay bonuses, and buy assets at depression prices. The American homeowners whose mortgages had been sold into those risky instruments received comparatively little. The Fed saved Wall Street. Main Street waited years for recovery. Congressman Ron Paul spent decades calling for a full audit of the Federal Reserve. The Fed consistently resisted, arguing that transparency would compromise its independence. In 2010, a partial audit was finally conducted as part of the Dodd-Frank Act. What it found was remarkable. The Federal Reserve had made over $16 trillion in secret emergency loans to banks and corporations around the world during the 2008 crisis. Not 16 billion. 16 trillion. None of this had been disclosed to Congress or the public. The Federal Reserve does not operate in isolation. It sits within a global network of central banks, coordinated through the Bank for International Settlements in Basel, Switzerland, an institution so private that it was literally granted immunity from Swiss law when it was established. When the Fed makes a decision, it is in communication with the European Central Bank, the Bank of England, the Bank of Japan, and others. This coordination is not secret. What is never publicly discussed is what exactly they are coordinating and toward what end. In 2009, an unknown person or group under the pseudonym Satoshi Nakamoto released Bitcoin. The timing was not coincidental, it appeared during the height of the 2008 financial crisis, and its founding document explicitly described itself as a response to the failures of the central banking system. For the first time in history, a currency existed that no central bank could inflate, no government could seize, and no boardroom could control. Whether you believe in cryptocurrency or not, its existence is a direct response to the system Jekyll Island built. The Federal Reserve Chair holds no elected office. They are appointed by the President and confirmed by the Senate, but once in office they serve 14-year terms on the board and are extraordinarily difficult to remove. When the Fed chair speaks, markets move. When the Fed chair raises rates, mortgages become unaffordable. When the Fed lowers rates, asset prices inflate. One unelected official, in one boardroom, wields more immediate power over the daily economic life of 330 million Americans than any elected official in Washington. Here is what the Federal Reserve System means in practice for the average American. Low interest rates inflate the prices of homes, stocks, and assets you may not own. High interest rates make the debt you already carry more expensive. Inflation erodes the purchasing power of the wages you earn. The system consistently benefits those who already hold significant assets and consistently disadvantages those who are trying to build them. This is not a conspiracy. It is the mathematical structure of the system that was designed at Jekyll Island in 1910. Understand the Federal Reserve is not to become paralyzed by it. Understanding it is the first step to navigating it. Hold assets that protect against inflation. Understand that the money in your savings account loses purchasing power every year by design. Recognize that decisions made in private boardrooms affect your mortgage payment, your grocery bill, and your retirement savings. The system was built by powerful people to serve powerful interests. Knowing that does not change the system. But it changes what you do within it. This is the Redacted.